What's up, everybody? It's the Common Sense Investor coming at you with another video, and I'm kind of excited about this one. This is going to be my first IPO video that I'm shooting for y'all. The reason I've been away and not making as many videos is because I have a mentor over in the Discord who is taking me through the prospectuses of all of the IPOs that are coming up, and she's sharing with me what's important to know in the prospectus, what's not important. You can skip over that. Fundamentals, how important are they, and stuff like that. Well, from what she's been teaching me, I have condensed and put into a little newsletter. All right, sort of newsletter. What it is it's the Common Sense Investor IPO news and updates. All right, and this one is for Hempacco. It's a distributing tobacco company. All right, ticker symbol HPCO, and the IPO filing date is tomorrow, 8/30/22. Now, if you're wondering if you want to get into this IPO or not, this is the result of my research and what I've put together, and I'm going to tell you at the end what my decision will be for Hempacco. All right, but for right now, they are offering 3 million shares at a common share price of $5 a share. There's a little bit about the company, and if I zoom in, you can see at the bottom of the newsletter, I got the important things like initial public offering, 3 million shares, $5 win, the main underwriters, Brosted Securities, and what their underwriter rank is, which we'll get to that in just a second. All right, and then what underwriter privileges they have. All right, and then page 2 of the newsletter, I focus specifically on the underwriter because it's my opinion, who is bringing this to the market is probably the single most important thing about whether you can pick a winning IPO or not. And in this particular case, it's Brosted Securities. And what I've done is I've created this spreadsheet of all the past IPOs this year, and I've got the outline for them in this sheet. I got the opening price right here, where it came, what the shares were, and when it came to market, what it opened at, what was the high and the low. Then I got a 3-day performance scale that tells me 3 days after it became public, what did it do. All right, it was at $54.01. 62 was the high, and 31.20 was the low for Jeff Brands. All right, so I took that information and I put it here in the past opening performance scale. All right, and this underwriter, Brosted Securities, has underwritten 6 IPOs this year. This was the offering price. This is what they opened at, and that was the day's high and lows. But what's important here is the offering price was $5 for this IPO, and it opened at $5, so it got a negative line there. All right, this IPO was for $9. It opened at $50. It went as high as $57 on the first day, so it got a baseball bat. All right, and this one was for $4. It opened at $30. This one was at $6. It opened at $15. So they're all getting the baseball bats because they've hit a home run with these. This one was $5 and it opened at $20. It went as high as $26. Baseball bat. Very simple. So out of these 6 IPOs that it's brought forward, they've had 4 winners, 2 ties, the ones that opened pretty much where their offering price was, and no losses so far for Brosted Securities. So that looks good. On the 3-day performance, we see that it gets bad. All right, where the opening day was 4.2, by day 3 they're 4.0 and 2, which means these have ended up falling below what the offering price was. So it was the offering price of $5. 3 days later, it's trading at $3.85. So it got an X. It lost in 3 days. This one right here, it had an offering price of $4, and it's at $1.86 in 3 days. So it gets an X. These stayed pretty much the same. So they stayed in the winning category. That's how you're going to read this sheet from here on out. I won't explain all of that. We'll be able to just look at it and do a quick analysis. But for now, I got to break it down and show you how to read this. Now, this is going to be important because it's going to tell me, this performance sheet is going to tell me rather this is going to be a safe security to hold past the first day, which I usually don't like to do. I like to get rid of these son of bitches the moment they come onto the market before a halt. But this lets me know if it's a keeper or not for a few days. And in this particular case, Hempacco shows me that it's not. That it's already performed what it's going to do. In the last 4 stocks that stayed the same, but 2 fell back instead of moving up. So I pretty much don't like Hempacco for more than 1 day. All right. The next important sheet that we're going to look at is going to be the underwriter's privilege. Now, next after underwriters, how important that ranks with me is the underwriter privileges. What privileges are they getting for writing this security and bringing it to the market? In this case here, Hempacco, the main underwriter, is Brosted Securities, and if the underwriters sell more of the common stock than the total number set forth in the offering, which was 3 million, all right, not later than 45 days after the date of the prospectus, they can purchase up to 150,000 additional shares of the common stock at the public offering price, constituting 15% of the total number of shares of common stock to be offered in this offering, excluding shares subject to the option. Okay, basically what that means is, if there is a great need, if the hype is so much on this stock that they can continue to sell past the 3 million, cool. They're giving them the option to do that, and they can claim up to 150,000 extra shares that way. All right. But the most important, and I'm going to zoom in so we can see, representatives' warrants. This is going to be an important point, okay? Hempacco has agreed to issue to the representative warrants to purchase up to a total number of shares of common stock equal to 7% of the total number of shares of common stock. What does that mean? They have the right, but not the obligation, to buy 7% of whatever 3 million is, all right, of stock. And they are agreeing that they can exercise these warrants at 150% of the public offering price. Now, I like that. I like that condition. Why? Because they can get 7% more shares of Hempacco, but they have to exercise it at a price 150% higher than the public offering price, which was what? $5. So that's telling me 150% of $5 is what? $12.50. So they get the right to exercise their warrants and receive common stock. They can exercise that warrant at $12.50. So that's telling me that's a pretty good bet that Hempacco is going to go to at least $12.50, if not open there. And if it opens there, they'll be able to exercise these warrants. They'll be able to buy more of the common stock. When it does that, the price will rise, supposedly. But let's wait. Look at the next paragraph. The representative's warrants will be exercisable at the time and from the time to time, in whole or in part, commencing from the closing of the offering and expiring 5 years. What does that mean? They got up to 5 years to exercise these warrants. And here's the important part. This will have a cashless exercise provision. So now we know that they have the right but not the obligation to get 7% more of the 3 million shares that'll be outstanding. They'll have to pay a price of around $12.50 for it, but it's a cashless exercise provision, which means what? Well, if you go Google what a cashless warrant is, it tells you upon exercise, a cashless warrant allows an investor to receive a certain number of shares without any outlay of cash. In other words, they will be able to buy or be able to receive 7% of the 3 million shares at 150% of the price, which is $12.50, but they won't have to pay for them. Hempacco is just going to give them these extra shares. That's why it's called cashless. It's an exchange of stock without any exchange of money. So that's bad. Very bad. Whenever you see cashless warrants, that means they will not have to pay for the shares that they're being rewarded. All right? So that is one of the bad things that I don't like about Hempacco. Now, I do think Hempacco is good for up to $12.50. I think it might even open there. So, knowing their past opening has been strong, all right, 4-2, and I know the 3-day it gets weaker, then I'm only going to hold Hempacco for 1 day and probably be the opening bell. Now, what I've done is I didn't want to touch any of my AMC and APE that's over there, so I sent some money to go ahead and be able to get into this IPO. I'm waiting on it to clear. When it does, the next video I do, I will show you the receipt of where I bought Hempacco and what our profits are. Speaking of profits, people that are talking shit about, oh, you can't make no money in the pre-IPO. Bullshit. If you're over here on my Discord channel, it's free. All right, we have what's called Show Your Results page. This person got 900.25% off of Starbucks. And this person got 2,960% on Jay-Z. Way to go, little green candle. And we told her that. I said, God damn. I was like, wow. Just freaking wow. 2,900% increase she made off her Jay-Z. So, people talking shit. There's money to be made in the IPO market, everybody. We're centering in on it while we're waiting on the squeeze. We'll be playing in these little plays right here, just off to the side while we watch the stock. With that, I'll close out. Love you, be blessed, and I'll see you in the next video.